Hey guys, welcome back. Hope you had a good week in the stock market. It's Friday, July 9th. We're going to talk about the SPY, the overall stock market, talk about GME, technical analysis, some options contracts, some spreads, different plays I'm doing for this week and next week, what I think is coming. It's up, like up, comment down. Happy money sticks around. SPY today, another all-time high. I'm so proud of our girl. She just keeps on trucking. On the daily, it's still bullish. We still have the nice MACD crossover and that little correction the other day, which was actually larger than I realized as far as extended hours, because it opened up over 1% lower, which is I heard that was like fourth biggest basically change from close to open in a long time, maybe ever. So yesterday could have been a huge day, but it got propped up, and now today we're back to all-time highs. So here we are. However, as we've seen before, it kind of does these blow off the tops, and at one of these points, it's going to actually not recover how it has recover. That's funny to say it that way. Recover. So we had it here, we had a top, and it did this bouncing recover. We had it here where it could have started correcting, and then nope, and then we're starting to have it here and didn't accept it. So it's starting to waver and teeter, and it actually has been for months now, which is good. I mean, the longer it goes like this, the sooner we have for it to actually correct. But if you look on the daily, you can see we've got a divergence in the RSI here. Easier to see on the hourly, but I'll just show you on the daily. If you see this high, and then you see this high, and then you see this high. So this is a high, this is a higher high, and this is a higher high. But on the RSI, it's lower on each RSI. This one's 70.35, this one's 70.11, this one's 66.98. So we've got an RSI divergence there, which is a sign of a reversal. And here they are in the hourly. So you can just see the RSI. Just show you. I actually usually don't draw down here. No, I can't draw down here on Webull. Lame. Anyways, you can see the RSI is getting lower while the stock price is getting higher during those peaks. That's one divergence. The other one is the MACD. MACD is getting lower while the stock price is going up. So this is due for a correction. Whether this will be the very top for years to come and just bear market for 3 more years from here on out, I don't know. Or will it just be more of this, kind of this choppy range, kind of like we started 2 days ago. That was a top, then we got this chop, and then we got this. It's kind of the same thing I was doing here. Not sure how much longer it can do these kind of volatile peaks before it comes down. I've looked at 2008 and kind of the top that lasted there, and it did do this for a couple months actually, where it teetered and then it kind of corrected and then it kind of came up and then it kind of slowly just crossed over and was bearish and then kind of flattened and then it actually crashed. That was a little different circumstance than what we have here, but yeah, with the divergence there, I do think you need to get a little bit of time, but I opened up some plays to basically take advantage of the market correction. And that is also, so I'm thinking next week we're going to see definitely some red. So we'll see. And then we also have catalysts that could also be the catalyst for it to go down. We've got bank earnings, CPI, bonds, different things that are in the market. And then we've got this new COVID Delta variant. You know, they can use any of that stuff and scare the market. So that is the SPY. When the SPY goes down, GameStop might go with it initially, and we will see how it plays out with the squeeze. I think GME rocketing could be the catalyst for the market crashing or market correcting. Everyone look at it. If GME is squeezing, also it's possible that the market correcting and crashing is the catalyst for GME squeezing. So it can go either way. So far, we've only seen basically the whole market has a negative beta towards GME, which is what I was saying in yesterday's video. And so that means to me when GME rockets, because hedge funds are being liquidated, the market's crashing, being sucked into GME. So if we see it the opposite, where the market's dumping, GME's going with it, and then GME stops and inverses, that's something different. That might be the beginning of the squeeze, basically, since it's something that's different and much more dramatic, I would say. So that being said, yeah, GME hit a nice double bottom here, which we mentioned on the hourly. It crossed over bullish, which is good. It hasn't done that since back here 628 last month, and then it just kind of came up to that range. So I expect at least on this next week, besides everything else for next week as far as NFT, crypto, I can't remember all the catalysts for, failed delivers, the puts, in the money puts that are expiring. Regardless of any of those other catalysts that might make it go crazy, just looking at the TA, I see us at least coming back up to our resistance here next week and hopefully breaking out of it. But because we kind of got to the bottom of this range, the bottom of this this trend line, and so at the very least probably come back up and bounce off of this, and depending on what these catalysts do, we will rocket out of here, and that will be, it's still kind of a cup and handle. I mean, it's a long handle, but we still could see a big breakout. And yeah, I think those catalysts that are coming next week could very well be it. Here's Amazon's cup and handle that just kind of played out the last few weeks. This started actually in March or April. Nice cup here, little handle, and then broke out from that, to give you kind of a recent example. But yeah, so that's what I'm thinking for next week. On the daily, it's still not bullish. There are some good candlestick signs. This long doji is a good sign of a reversal. This big green candle, I mean, these are good things. And then this one up here, it's kind of looks like it's holding kind of this support, this 199 area for these last 3 days. This is also, you could kind of call it a head and shoulders if you just look at the bodies more or less of the candles. This would be your shoulder, and your head. So, or inverse head and shoulder. But as far as MACD and the moving averages, still bearish. We're low on the RSI, which gives us spring power, but we're so below the 9 moving average that's why, at the very least, us pulling back up and then maybe bouncing off this resistance next week. If nothing else happens, I think we'll at least do that. But if we do that, we're probably going to pull the MACD back bullish, and when this thing goes bullish on the daily, like it did right here, it likes to run. It did it here also, and that might be what we're looking at for the next. Nothing happens next week, it'll probably be another one of these weeks, just consolidating and premium dropping on options. However, it could be something like this, where daily crossover on the MACD next week, and we just go crazy for 9 days. There was that write-up about the 90-day cycle that we're seeing. So this is like a 16 or 17-day upswing, and then a 90-day cycle. So this was 90 days from here to here, both these breakouts, and then 90 days from here to here. So this would put that at September, I think, something like that. I'm not too keen on that write-up, but it is interesting to see. And like we've said, even back here, I was like, this is looking like this might be just like this, because this was also failed deliver top. We were claiming this right here was going to be like this, but I thought it was going to be much higher. Didn't go much higher, but everything else pretty much played out the same. These days, and then these days, and then the drop, and then the drop, and then so far we're doing this same thing right here. However, this was earnings, so it had extra power to go down. And then this was a little failed deliver. So if you take out that, it looks pretty similar to what's going on here. So much so that even down to this candle right here and this candle right here, this green candle could be like this green candle we had yesterday. So if next week doesn't catalyst and make us go crazy, then it could be something like this, a couple more weeks until we're waiting for another cycle of failed delivers or whatever kind of hedge fund screwy is about. I don't think it's too far along though. I think we're getting there. So I'm buckled up, basically. Option plays that we have. I rolled over puts that I sold. Here's SPY. I rolled over the SPY call credit spread. This thing was up 80% this morning when SPY opened, and SPY just decided to have an insane rally today. and then it was going to expire, basically not worthless, but full value. So I wouldn't be able to close it. So I rolled it. Should have closed this morning, I guess. I even got a SPY put today, but yeah, all my SPY puts don't make the market go down. I don't know what happened to my magicianry. Yeah, magicianry. I have these puts for next week, next Friday. This one's pretty far out of the money. This one's not too bad, 425. And then I rolled this call credit spread to next week also. SPY right now, like I showed you on the chart, I think it's by next week should come down. So we've got 425 puts, 6 of these, 432 puts. These both expired, they'll be worthless. Also this call credit spread, and then this 360. GME, we rolled 205, 207.5, and then 210 puts. I just kept all the same strikes and basically just rolled them. Oh crap, I rolled them 2 weeks. Okay, that makes sense then why I was able to get that premium. Okay, well, no worries. If they go up, if we start to moon next week, I will close these out for close to or a lot of gain, and then probably just buy the shares. Yeah. And then I did get some calls yesterday that I forgot to mention in yesterday's video, but I got some calls yesterday at that dip, and they did pretty well until today, which I said yesterday. Talk to me tomorrow when they're down 30%. Actually down 50%, some of these. So pretty hyped up. Gonna wait for next week. Didn't go crazy. I almost went crazy on them, but I was like, I need to wait, patience. Got 9 of these 350s, 8 of the 310s, and 3 of the 250s for next Friday. And then I haven't sold covered calls in our shares yet. I've been too scared, and then by the time I was going to do it, we haven't had any green days really, like any kind of pop really in the price from when I got the shares, because I got the shares back here and I was waiting for some kind of bump to get, you know, basically able to sell them. And it didn't really happen, and honestly the premiums have come down quite a bit even on the calls. So I'll wait until this next bump and sell covered calls on it if it doesn't begin the squeeze. What else did we do today? Rolled over, and that's pretty much it on there. So this week, not great. SPY 1200. A lot of stuff's rolling over and not really realizing. So actually, that's not bad for the shares. That's just today, but not too bad. On our long term, I can't show it because it's on Fidelity. Oh, I also rolled over here on this account. I sold one put on here. I don't know if I showed you guys this before. I rolled this over for next week. There's a 205 put. This one actually I got the right day. I don't know how I messed that up. Anyways, some Reddit reads here. Walter Bloomberg, Fed report, upside risks, the inflation outlook in the near term have increased. Yep, most measures of hedge funds leverage are now above their historical averages. Fed report, Fed prepared to adjust stance of monetary policy as appropriate if risks emerge. A lot of different signs of sketchy stuff going on. Here's a nice little screenshot. This was by user K2FA91. This is user Munabig. Yeah. 2008, today, Wells Fargo did the exact same thing in 2008. Basically cut their lines of credit, all personal lines of credit. Shuttering all personal lines of credit. We've got puts on Wells Fargo. And yeah, that's what I got for you guys. Hope you had a good week. Sub up, like up, comment down. Happy money sticks around. We didn't do great this week, but that's because I pretty much am only playing GME and the market crashing, and GME crashed and the market ripped. So that's what I got. I've basically taken a break from all other stock market activity until this happens. Just because I guess I like to keep focused on one thing until it and see it through. So we'll see what happens. Have a good weekend, guys. Chill out, watch Bitcoin plummet, and hopefully next week we'll see something crazy. Sub up, like up, comment down. Happy money sticks around. Here's our Twitter if you'd like to follow us on there. We also have a Discord you can jump on. Okay, peace out.